Not such a home sweet home Depot after all for Robert Nardelli. The home improvement retailer and its CEO part company after a string of problems, from Nardelli's pay to the company's stock performance. He leaves with a golden parachute worth $210 million.
From sky high to not going anywhere fast, Wall Street started off trading in 2007 with a huge burst of buying, and the Dow racking up triple-digit gains by mid-morning. But the blue chips closed the day with just a small gain, and we'll tell you why.
Toyota is the big winner when it comes to December's vehicle sales. The Japan-based automaker racks up double-digit gains as its biggest competitors see double-digit losses.
And our street critique guest says the financial markets are doing just fine, thank you. And he has some thoughts on why they'll stay that way in 2007. He's Todd Harrison, founder and CEO of Minionville.com.
I'm Paul Kankis.
And I'm Suzanne Pratt. Susie Garib is off tonight. This is Nightly Business Report for Wednesday, January 3rd.
Nightly Business Report is made possible by...
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Home Depot stunned Wall Street today with a major renovation of its top management. Robert Nardelli abruptly resigned as chairman and CEO of the home improvement giant, sending Home Depot shares closing more than 2% higher. Scott Gervey takes a look at what Nardelli's departure could mean for the future of Home Depot.
Since he was hired to run the nation's second largest retail chain 6 years ago, Robert Nardelli has been paid more than $240 million in salary, bonus, and stock. But Home Depot stock has been flat at about $40 a share throughout his tenure, much to the displeasure of shareholders and Wall Street analysts. They responded to today's news that Nardelli is out with positive forecasts and a 4% jump in the share price when trading opened this morning. Bud Bogach of Raymond James sees more of the same.
Next year, I think the stock will do well. I think the valuation of the stock should be in the 50s, so we see about a 20 to 25% upside from here in the relatively near term.
Home Depot will need to see higher valuations if it is to head off the shareholder revolt which triggered Nardelli's departure. The CEO was the only board member to attend the company's annual meeting last May, where he refused to answer questions about performance or his compensation. Those questions are certain to continue. Nardelli leaves Home Depot with a severance package worth $210 million. About half of that is deferred compensation. Incoming House Financial Services Committee Chairman Barney Frank, a critic of high executive pay, was quick to comment.
I guess the board of directors of Home Depot finally decided that Mr. Nardelli had to go, and they put their foot down and gave him $210 million and asked him to please leave, at which point he apparently succeeded for the first time in raising the stock price by leaving.
Governance issues aside, analyst Michael Cox of Piper Jaffray says the housing slump had a great impact on Home Depot's bottom line last year.
We continue to expect a challenging 2007. The company continues to derive most of its business from the do-it-yourself retail marketplace, which, given the softness in the housing market, is going to continue to put pressure on the fundamental results.
Home Depot's new CEO is Frank Blake, an Nardelli protege who was Home Depot's vice chairman. Scott Gervey, Nightly Business Report, New York.
The Federal Reserve is growing concerned about balancing inflation and growth. This afternoon, the Fed released the minutes of its December 12th Open Market Committee meeting, saying inflation is #1 concern. But the panel also believed the subdued tone of some recent readings on the economy could mean risks to growth are increasing. At that meeting last month, you'll recall the FOMC decided to leave interest rates unchanged at 5.25%. Analysts say today's minutes show no real indication the Fed will cut rates anytime soon. Well, that news knocked the wind out of what could have been another record close on Wall Street. The stock market took off like a rocket at the outset in the first trading session of the year, fueled by a sharp drop in oil prices and heavy buying in semiconductor, telecom, and healthcare stocks. At noon, the Dow was sporting a 110-point gain, while the NASDAQ composite was up 35 points. Just after 2 p.m., when those Fed minutes came out, the blue chips tumbled to a 50-point loss and then made a late comeback. So the Dow Industrial Average managed to close up 11.37 at 12,474.52. The NASDAQ composite gained 7.87 at 2423.16. Standard & Poor's 500 fell 1.70, ending at 1416.60. Over the bond market, the 10-year note rose 6/32 to 99 and 23/32, putting the yield at 4.66%.
December was another rough month for the nation's automakers as they struggled to turn around sales and clear out 06 models. General Motors put the wraps on a dismal year of sales with dismal December results, down 13%. Its car sales were flat. The big losses came in GM's light truck division, down almost 20% despite heavy advertising. But don't look for GM to cut sticker prices. The struggling automaker says it has no plans for price cuts or hefty incentives. Ford also saw a 13% drop in sales last month. It blamed the weakness on changing demographics, a soft housing market, and the retirement of its popular Ford Taurus sedan. Ford beefed up incentives today. It's offering 0% financing and special lease deals on top-selling models. Sales at Daimler Chrysler's U.S. Chrysler Group grew by 0.5% last month as dealers did what they could to cut remaining 2006 model year inventories. Meanwhile, Toyota Motor checked in with solid gains in December, up 12%. The big Japanese automaker is on track to push Ford out of the number 2 spot for sales in 2007. Honda sales dipped slightly, down almost 1%. Standard & Poor's auto analyst Bob Schultz calls the big drop in truck sales at Ford and GM especially troubling.
On the full-size pickup trucks, the F-Series was down for Ford, and GM is launching its full-sized pickup truck segment right now, relaunching it, and that market's becoming more competitive as Toyota also launches their full-size pickup truck. So again, that segment's potentially subject to housing weakness. Again, we don't think it's going to collapse.
Schultz sees overall sales this year coming in just shy of 16.5 million cars and trucks sold last year.
The incoming Democratic chairman of the House Financial Services Committee is talking with business and labor groups about what he calls a grand bargain. Congressman Barney Frank today said he will support business agenda items like trade and immigration in exchange for business support in closing the wage income gap. And then Frank wants trade bills to address workplace conditions. He wants to make it easier for unions to organize and for employers to support universal health care. He says all Americans should have a stake in economic growth, a concept he likens to staying afloat financially.
The rising tide lifts all boats has always been a problem. If you think about that analogy, the rising tide is a very good idea if you have a boat. But if you are too poor to afford a boat and you are standing tiptoe in the water, the rising tide goes up your nose.
Frank and the other members of the House and Senate report for work tomorrow, and the 110th session of Congress will get down to business. One of the first orders of business will be to reform the ethics guidelines used by the lawmakers themselves. Washington Bureau Chief Darren Gersh reports.
One day before they take control in the 110th Congress, Democrats met behind closed doors trying to turn their campaign promises into reality. Representative Louise Slaughter put at the top of the list ending those infamous corporate-sponsored junkets.
The idea of a member of Congress flying on a corporate jet, being a captive of that corporation for hours on end, is really repulsive to most of us. We should not allow that.
The House will vote on new Democratic ethics rules banning travel paid for by companies or trade associations that employ lobbyists. Trips funded by universities or foundations would have to be approved in advance by the House Ethics Committee. The new rules would double the so-called revolving door limit, making lawmakers and senior staff wait 2 years before taking a job lobbying their former colleagues. Common Cause's Mary Boyle calls the proposed new rules a good first step, but adds they should be applied by an independent panel.
But without the enforcement to kind of back this up, it is not really credible in our eyes, because we have just seen the rules not followed too many times before.
Paul Miller represents corporate and trade association lobbyists. He says the new guidelines would make it harder for members to travel overseas and learn about trade issues affecting jobs back home.
My concern is the trips will go away, and they're not going to be able to visit plants. They're not going to see new technology. They're not going to be able to visit with workers who may be losing their jobs or impacted by something that may be happening overseas.
House Democrats also pledged to limit member pet projects. Committees will now have to list those earmarks when they pass bills. But President Bush wants earmarks identified in law, not just the committee reports used to explain legislation.
Here's my own view. To end the dead of the night process, Congress needs to adopt real reform that requires full disclosure of the sponsors, the costs, the recipients, and the justifications for every earmark.
There may also be an important loophole to the travel ban. Members of Congress might still be able to use corporate jets to attend fundraisers, which are covered under federal election law. Darren Gersh, Nightly Business Report, Washington.
Today is Massachusetts Governor Mitt Romney's last day in office. It's also the first day of what he hopes will be a successful bid for U.S. president next year. Romney is filing paperwork to form an exploratory committee, letting him raise and spend money for a White House run. Romney is the 5th Republican to file with the Federal Election Commission for the 2008 race. Already in the field, Arizona Senator John McCain and former New York Mayor Rudy Giuliani. Before going into politics, Romney founded a multi-billion-dollar venture capital firm and successfully ran the 2002 Winter Olympic Games in Utah. If elected, Romney would be the nation's first Mormon president. Eastman Kodak and Sony Corporation have ended a long-running patent fight. The two companies have signed a licensing pact that gives each access to the patents of the other. The patents involve digital camera and imaging technology, and the firms have been wrangling over them for almost 2 decades. Kodak is in the middle of making itself into a major player in the digital camera and printer industry. That's because demand is drying up for traditional photographic film, which used to be Kodak's major source of revenue. No money changed hands in the patent settlement, Paul.
Well, some money went into both Eastman Kodak and Sony stocks on the news, Suzanne. Both had small gains on the day. Now let's look at the rest of our stocks in the news tonight. New York Exchange volume leader on 24.8 million shares, Ford Motor. No change on the day. It traded as low as $7.44 after the company said December sales fell 13%, mainly due to weak demand for its trucks. GE managed to gain 76 cents on the day, and then AT&T down 80 cents. This is the first day of trading for the company, which now includes Bell South. Then came ExxonMobil, down $2.52 on the very, very weak oil market today. Let's have a look at some other major oils in the sector. Chevron, Conoco, and Marathon Oil all down significantly, and the oil service stocks also hurt. Halliburton and Schlumberger well on the downside. Getting back to the active list, we see Home Depot, fifth in volume, up 91 cents. As you heard, Robert Nardelli is out as CEO, but today Standard & Poor's repeated a strong buy recommendation on HD stock. Pfizer, a 39-cent gainer. EMC showed no change on the day. Walmart stores up $1.37. The company estimates its December same-store sales were a better than expected 1.6% on the upside, and Standard & Poor's today repeated a buy recommendation on Walmart stock. Ensco International down $1.61, even though it is replacing Bell South in the Standard & Poor's 500 index. 10th in volume was Alcatel-Lucent with a 97-cent gain. General Motors had a rough day, down $1.27 after Bank of America downgraded it from neutral to sell and also cut its price target on GM stock from $30 down to $25 a share. Then came the airlines, reacting very positively to the sharp drop in oil, up $2.63 on American. Let's have a look at some of the other major carriers. Continental up $2.72, $2.36 gain in UAL, and U.S. Airways rising $2.45. Very strong group. Brilliance China Auto Limited up $4.44 on rumors that BMW wants to take a significant stake, perhaps about 20%. However, BMW spokesman denied that. Then we see Freeport-McMoRan copper and gold down $5.24, and that's because of a continuing drop in the price of copper today. Terex Corporation off $5.52. Citigroup downgraded it from buy to a sell recommendation. Goodyear Tire and Rubber doing well, up $1.81. That's a positive reaction to the company's new labor pact and, of course, the end of the strike. Deutsche Bank Securities upgraded the stock today from hold to a buy. Then UniFirst Corp doing well, up $4.34. This is a company that's in the workplace uniform business, and it had good first quarter earnings, 71 cents up from 59 last year, and that was 6 cents better than the street was expecting. Intercontinental Exchange up $7.82. Company said its December average daily volume was up 128% over last year. Average daily OTC commissions up 78% from a year ago. Apple Computer topped the NASDAQ active list down $1.04, but Google up $7.11. Piper Jaffray Brokerage boosted its price target for Google stock from $600 to $630 a share. Microsoft showed no change in Cisco System, 40-cent rise. Research in Motion up 77 cents. That was fifth in dollar volume. Intel gained a dime. Qualcomm, 33-cent loss there. Oracle was up 37 cents, followed by Amgen with a 9-cent gain. NVIDIA, 10th in NASDAQ dollar volume, was down 93 cents. Baidu.com up $9.72. CIBC World Markets made bullish comments about the upswing in internet advertising in China. And finally, shares of EGL Incorporated soared nearly $8 after receiving a $36 per share cash buyout bid from a team including its CEO and a private equity firm. Tonight's Street Critique guest says he thinks the bullish momentum that propelled the stock market higher in the second half of 2006 will continue over the near term. He's Todd Harrison, founder and CEO of the financial education website, Minionville.com. And Todd, welcome to Nightly Business Report.
Hi, good, Happy New Year.
And the same to you. Now, let me ask you first that the abrupt downside reversal after the Fed released the December minutes of its FOMC meeting today, was that sell-off overdone?
I think we have to be careful not to read too much into one day's action. We had nice momentum into the end of the year. There was a lot of euphoria floating around the markets this morning. I think it was an excuse to take some profits.
Well, you do see the markets nevertheless moving higher over the short term. How short is the term, and then what happens?
Well, I think that depends on the dollar. I'm watching the dollar really as the valve that's controlling most all asset classes. And as long as the dollar stays relatively stable or lower, I think the momentum can continue, but I think there's some longer-term issues with the greenback.
So you're concerned, you think the dollar could go lower. The chances are probable it will.
Oh, eventually it will. I think the sentiment got a little bit negative in the short term, and there's a lot of debt out there that's being serviced, that's maybe driving the dollar back higher structurally. But I think the broader trends, the secular trends, are support a lower dollar.
Lower dollar is good for gold, is it not?
It is good for gold. Gold and energy are actually two sectors that I think are relative winners versus tech and financials. And I'll stress relative because you can't really spend relative performance, but if you could pair off some energy and metal holdings versus some tech and financials, I think you'll do quite well.
I also understand you expect an uptick in market volatility this year. Why do you believe that?
Absolutely. I think volatility has been compressed, and I think that the proliferation of a lot of income funds that are selling volatility or selling options has exploded. So that's actually created a compression in the marketplace. And I'm not sure what the catalyst is, but I expect market volatility to uptick nicely in the next year.
Now, we have been reporting about the expected reset of $2 trillion in adjustable rate mortgages this year. Give me your take on that, and do you see that reset as a defining force in the economy this year?
Well, I think it has to be. You know, I live in New York City, and I rent rather than own. But a lot of consumers out there in the heartland have used their home equity, you know, as a vehicle to support their spending habits, and the savings rate in our country is just absent. So I think the Fed is in a bit of a box. I think they want to raise rates to appease the foreign holders of our debt, but I think they need to lower rates to combat potentially slower global growth and this adjustable rate mortgage reset.
Okay, so that could be a rather tumultuous occurrence, correct?
It's a tightrope.
Okay. Todd, I want to thank you for joining. It was great to have you on our air.
Paul, thank you. You have a great New Year.
And the same to you, my guest, Todd Harrison of Minionville.com.
Tomorrow, we sit down with Treasury Secretary Henry Paulson for the latest on the economic and trade pictures. Here's a look at what's happening tomorrow. November factory orders come out along with weekly jobless claims and the weekly check on crude oil and gasoline inventories. In the money file tonight, if your New Year's resolution is to get a better handle on your cash, you may want to try a new approach to the problem. Here's Eric Schoenberg, managing editor of Money Magazine.
Does this sound familiar? You earn good money, and yet it seems most of your disposable income goes to pay interest on your debts. Well, if it's any consolation, you've got plenty of company, and there are a lot of schemes that claim to help you, from zero-interest balance transfers to debt consolidation loans. But the fact is, they'll only make the problem worse unless you change the behavior that got you in hock in the first place. Don't count on willpower alone. You've got to play tricks on yourself. First, take the credit cards out of your wallet and put them in a drawer. That creates a physical distance between the impulse and the means to buy. In the time it takes you to fetch the credit card, you might just reconsider. For extra psychological advantage, make a credit card-sized cardboard card and put it in your wallet so that you can't grab plastic without seeing it. On that card, write the following. Do I really need this? Is there a cheaper way to get the same benefit? What will I give up to afford it? Again, the idea is to inject some reason between you and the animal urge to spend. As for getting out of the debt you're in, financially, the smartest thing to do is to pay off your highest interest loans first. But psychologically, maybe you want to start with the smallest ones. Totally wiping out a debt from one or two creditors might give you the mental momentum to finish the whole job. Think of it this way. Living below your means is the new sign of success. Keeping up with the Joneses is so out of date. After all, do you have any idea how deeply in debt the Joneses are? I'm Eric Schoenberg.
Recapping today's market action, Wall Street starts out strong but doesn't end that way. The Dow gained a modest 11 points and the Nasdaq closed up 7. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org. You can also email us at nbr@pbs.org.
Finally, tonight, it's the beginning of a new year in your office and a great chance to get organized. Office Depot has some suggestions on how to make things more productive. Slim down the piles, get rid of that huge stack of paper on your desk, and shred what you don't need. Tone up your to-do list, break down large projects into manageable parts, increase your file finding flexibility, file your paperwork as you go. It can prevent clutter and make files easier to locate. Train for a less taxing tax season. Don't stuff receipts into a shoebox. Instead, use tax software to help you keep and track everything. These suggestions come, Paul, after a new survey showed 53% of people function in an office that they describe as controlled chaos. And I would be in that 53%.
I would have uncontrolled chaos in mine. That's the way it is.
That's Nightly Business Report for Wednesday, January 3rd. I'm Suzanne Pratt. Good night, everyone, and good night to you, Paul.
Good night, Suzanne. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more more information about investing, you may order Nightly Business Report's home video, How Wall Street Works, by calling 1-800-535-5864. This program is available in either the VHS or DVD formats.
We are PBS.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. The Collins Foundation. The Collins Foundation is dedicated to improving the quality of life in Oregon. Conkling, Fiscum, and McCormick's Me to You Marketing, providing word-of-mouth marketing services to build, sustain, and measure consumer conversations about your products and services.
At PBS, we practically invented science on television, and now we need you to help us reinvent it. Here's the experiment. We've got 3 new science